Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, S&P 500, Nasdaq, as well as the economic calendar, plus 10-year treasury, inflation numbers, and as to why the market's going down. As I've stated in the past week, I guess, give or take, the markets were indicating downside, plus we have the PCE number, inflation numbers coming out on Friday, 8:30 a.m., which are very important because we could drop another 2% and still bounce off the upward trend support levels. But the thing is, though, if Friday's horrendous, which pretty much cuts close to that support level, then we'll just trickle down to the next major support level, and more downsides obviously expected to come. So in terms of indication, it actually looks like it potentially could break off the support levels. So unless those numbers are good, so if inflation comes in worse than expected, then obviously we're going to get lower. If it's better than expected, inflation numbers reducing, then we'll bounce off the support level. So we're pretty much cutting it really close, and I'm going to go through all the analysis. But before we do, I'm going to go over the economic calendar, and then I just want to go over the inflation number. So the .gov website, we're at 3.4% right now. So the Fed, they want to hit their target of 2%. So in order to hit the target of 2%, they basically have to either keep interest rates at the same level based off of their calculations and how they think that to combat inflation is the way to go. So in their viewpoint, just either keep interest rates at the same level or increase them. The downfall is they can't necessarily increase it right now because they've been indicating for this year that there was going to be multiple rate cuts. Then the market now, based off that sentiment, has changed it to 1 or 0. And then from the last meeting, they stated that it's going to be delayed. And then from the last 2 of the 3 times that the Fed kind of talked and Jerome Powell was in the mix, Jerome Powell stated that, in his opinion, the next rate decision, and when it comes to actual movement decision, so an increase or decrease, is more likely to be a decrease. So they can't necessarily just shift the sentiment right away to increase, even unless the numbers are horrendous for PC, which if it is, then the market will act negatively to it, right? It'll just straight crash, not crash, but like end up heading down and breaking the support levels. So that's the thing that we got to be wary of. That's why Friday is very important. And that's why, in my opinion, for example, leading up to this Friday, the market with the indications is tend to head down lower. But at the same time, Thursday, towards the end of trading day, I think we're going to see even more further drop, if not even in the beginning of the day too, to be honest, because we could even see after hours, in terms of the market, this U.S. market, they've all headed down right after hours. So unless it's either going to be all day drop or the end of the day, basically. So yeah, so then Thursday, May 30th at 8:30 a.m., we have initial jobless claims. We have GDP first revision. We have advanced U.S. trade balance in goods, advanced retail inventories, advanced wholesale inventories, and at 10 a.m. we have pending home sales. At 12:05 p.m. we have New York Fed President John Williams speak, and at 5 p.m. we have Dallas Fed President Lori Logan speak. And then keep in mind, 8:30 a.m. is the PCE numbers. More specifically, they're going to look at the core PCE. The reason why I'm kind of stating that is because energy is taken out of that inflation number. So in terms of core PCE, energy is taken out of it, which could be hypothetically not necessarily a saving grace, but it could come out where the inflation number is either pretty much flat or just like last time, slightly increased, which the market won't take it as a negative too much, potentially. But like always, by the way, I'm not a professional, so please do your own due diligence and research before buying and selling. This is all just my opinion. And thanks again for always support. Appreciate it. So 10-year treasury, it's at 4.616%. The reason why this is important is it has been increasing, and the people's funds could shift over to 10-year the treasury. But the thing is, though, it's not a drastic move right now. And I don't know if it's necessarily the reason why. I've seen some articles stating that it is moving a lot of funds because it's increasing, but I don't think that much personally. But that's just my opinion. Now, the thing is, though, with the Treasury increasing and the VIX increasing, which is volatility index, now that combination plus the indications, I'm going to go through all of them, they're pointing to the downside. So indications are pointing to the downside. Volatility index is increasing. 10-year treasury is increasing. Plus, we have the inflation numbers coming on Friday. It's pretty much a perfect storm, that to the point that Thursday, for sure, in my opinion, towards the end of the trading day, we'll be heading down for anticipation of the numbers too as well, because of the importance of them. And then by Friday, if the numbers are worse than expected, so that inflation is increasing, then we're going to be breaking some support levels for sure, in my opinion. Again, in my opinion. So first, I'm going to go over the Dow Jones. So this is basically a channel dating back since 2021. and we have an upward trend resistance line, upward trend support level. We've hit multiple touch points, 1, 2, and then within here there's 4, but you could see 2 major ones. And then we're heading down to potentially this support level. Now, if we drop 2%, right now we're at 38,441 points. If we drop 2%, we're at this upward trend support level, which is give or take about 37,600. It all depends on when we meet the upward trend support level, right? Now, if this could coincide where we drop 2% tomorrow and we're still able to bounce off this upward trend support level, and by 8:30 a.m. the numbers come in, let's say they're better than expected, so inflation is decreasing, then that will boost the confidence of the market, showing that maybe the Fed will cut interest rates this year. And if that is the case, then we could just reverse back up to the upside. But I don't necessarily, in my opinion, I don't think that's potentially going to fully happen, but anything is possible. If the numbers are good, then they're good. That's it. Otherwise, what's going to happen is, let's say come Thursday, or even potentially there's 2 scenarios. So the first scenario is we don't drop that much Thursday, anticipation for the numbers, and then by Friday we drop, but it's not a major drop. So 1% tomorrow and an additional 1% the next day, and then bounce off the upward trend support level by Monday. That is possible. Or basically drop and then Friday drop again because the numbers are just so, and then consolidate on this upward trend support level, and then finally curve up leading up to next week. Not leading up to next week, but within the next week. Otherwise, we're going to start going to this upward trend support level. The second one, it's more predominant, like it shows more visible when you see, like, for example, zoomed out. So there's touch points here, there's a couple touch points here, so on and so forth, and then support level right here, and then kind of somewhat collides with the moving average. But we'll assess it day by day for that. Now, in terms of MACD line, this is where it gets interesting too, because S&P 500 shows the same thing, and S&P 500 got stronger too as well. So in terms of 5-year chart, MACD line indicating downside, and we have 2 solid red bars. So this is a more bearish movement, and it's getting stronger. And at the same time, 1-year chart, bearish movement as well, indicating more downside. And then 6 month, I think all of them pretty much, 6 month, 3 month, trying to curve up for the 3 month, but this is more short term. And then 1 month is in the bullish movement. These are more of the short term. So for example, like I stated, Thursday, I think there's a chance maybe we could start bouncing up a little bit or something. I don't know what might happen exactly, but towards the end of the trading day, in my opinion, we'll start heading down. So maybe tomorrow in the morning we somewhat, even though after hours is down, and then pre-market might be down, but then you might see a little bit of a spike up, and then again towards the end of trading day start heading back down, because this is more shorter term. Now, in terms of S&P 500, just to cover it first, and then I'll go to the Nasdaq. We have an upward trend resistance line, or basically channel. I'm just going to go for the new viewers just in case. It's dating back since 2010, upward trend resistance line, upward trend support level, and then major crashes, upward trend support level. Basically kept down underneath here for the most part. And then if you look at the 5-year, since we're already on the 5-year, here's the MACD line, and it was trying to cross over technically, but it was kind of neutral, as opposed to the Nasdaq. The Nasdaq was trying to reverse the upside, especially given, for example, NVIDIA, since Nasdaq is predominantly tech sector, NVIDIA has a big market cap, so it moving quite a bit could move the markets, and especially on the tech sector. So in terms of Nasdaq, it got pulled by NVIDIA and the rest of the tech sector, where it could have potentially gone up to the upside, and it looks like it was trying to, and it was almost close, but again, the whole market's getting dragged down, so it almost doesn't matter. So Dow Jones and S&P 500 indicating further downside. 5-year chart, now we have a red tick right now fully, which we didn't have before, potentially, at least the 2 trading days we didn't have it. And then in terms of the 1-year chart, this is where it's interesting. It was pretty much flatline, but now it's curving to the downside, so indicating further bearish movement, potentially crossing over. Potentially, it hasn't crossed over yet, but soon it will. And then 6 month, it's in the bearish movement, downside indication. 3 month, bearish movement, downside indication. And by the way, again, after hours is pretty horrendous. We're at $526.10, and after hours we're looking at $523.89. So it's pretty substantial drops for the most part. Not crazy, obviously we could get crazier, but just for the most part, I think Friday's going to be very, very important. Then we have the 1 month showing bearish movement. So in terms of the S&P 500, it's showing more downside versus the Dow Jones. It just, to me, the Dow Jones is more clear that the downside is coming. But even though temporarily it's short term, it's showing a little bit of an uptick. But regardless, nonetheless, I think regardless, we're heading down until at least Friday morning, where it's more clear if inflation is getting lowered or not. And I don't know. I think it could be pretty bad on Friday potentially, unless it comes better than expected. We'll see. Or even flatline or slightly worse than expected. Because last time when we saw it was slightly worse than expected, the market didn't act too negatively to it. If not, it actually went up that day, I believe, if I'm not mistaken. But yeah, so in terms of an assessment for this one, now basically we were within this channel, broke through this channel, and we're just pretty much have a downward trend happening basically for the most part. Now, the price points that we have to break through to the upside first, in case you're expecting the upside, we have a lot of resistance at the $530 price point, 530 and some change. Then the next price point, I do not think we're going to pass this personally, because horizontally you can see a bunch of resistance right about here. It's about $532, give or take. Very hard to pass. It's not even showing 532. It's more like 531 and some change, but 532 is going to be very difficult to pass. Otherwise, I don't think we're going to pass that by Friday. Best case scenario, pass that on Monday. If everything's good, or Friday midday / towards the end of midday, because if the inflation numbers are better than expected, so inflation is lowering, then we'll spike up, and then we'll probably hit this upward trend resistance line. But I'll cover that tomorrow if I think that the lines are showing that we're going to potentially reverse up, which it won't even show until 8:30 in the morning in the Friday anyway, so it'll be too hard to predict. But then in terms of the next levels that we would have to pass, it's showing in terms of moving averages somewhere between $527, $528. So we have to pass these moving averages plus this downward trend resistance line that looks like it's pretty much holding through so pretty much 3 touch points, give or take. So ballpark around the $527 to $528. So $527, $528 is going to be difficult to begin with. Then we could pretty much balance where we're at right here, since almost support at 524. But I think ultimately what we're going to head down to is what I've stated before. There's a channel in terms of support between 518 to 522. Now, I think by the end of the day, we're going to end at between 518 and 522, maybe 517 and some change. But ultimately, then if we end up heading lower, where it's basically, what is he going to say? On Friday. For Friday, if the numbers are worse than expected, then what's going to happen is we're going to end up hitting the VWAP of 3-month, which is about $515, and then the 6-month about $503 for the VWAP. So that would have to be assessed more closer to that date, so tomorrow or predominantly Friday, to be honest, because until you get those numbers, you can't really tell fully. But I'm expecting for Thursday between the 518 and 522, give or take, in terms of channel. Now for the Nasdaq by the way, I was looking at SPY. So SPY is ETF for S&P 500. And then QQQ, which is the ETF for Nasdaq, that's what I'm looking at right now. So in terms of the 5-year chart, same thing shows, which is upward trend resistance line dating back since 2010, upward trend support level dating back since 2010. And then it did break through since 2020 to 2022, but it got back down, got knocked down, and then pretty much it looks like it's arching down again, meaning that upward trend resistance line. It hasn't necessarily hit it, but again, my lines are not perfect, so it probably, potentially, if I corrected the lines, it maybe did already hit it. But we're looking at the 5-year chart, and the 5-year chart was trying to cross over to a bullish movement, but you can see a red tick right here, and then it's arching, so maybe it's coming down. Maybe if the numbers of PCE numbers are worse than expected, that will drag it down completely, and then we'll see more downside, obviously. Now, in terms of 1 year, it was actually trying to arch up as of yesterday, and now we're seeing an arch down again. So definitely interesting stuff. To me, more of the reason why Friday is going to be more important in terms of the inflation numbers. And then the 6 month showing downside, 3 months showing downside, and then the 1 month showing downside. So we have the S&P 500 and the Nasdaq showing further downside, as opposed to the Nasdaq, as opposed to the Dow Jones. Sorry. So S&P, Nasdaq showing downside throughout the whole entire charts, except Dow Jones showing downside except for the 1 month. The 1 month showing a curve up. So potentially for the Dow Jones, might be a little bit up in the morning, potentially, but I doubt it. But either way, in terms of support and resistance levels, first, if you think it's going to go to the upside, we'd have to pass all this moving average cluster. So pretty much around the $457.82, give or take. We're at $456.44 at the moment, plus $454.16 after hours. So I don't necessarily think it's going to happen, but that is possible. The next level we're looking at, give or take, is about $459 to $460. And then we would have to pass the all-time highs, which is pretty much at 461, 462. Now, if you're very optimistic and you think somehow we're going to just go straight up to this upward trend resistance line dating back since 2010, you would have to pretty much pass $466, give or take. I just don't think that's going to happen. But if it does, more power to you in terms of if you're expecting that. And then in terms of support levels, so now the first support level after basically right now we could be bouncing off this level of 454. There is support at it because you can see a couple consolidation, but predominantly I think what's going to happen is that I've shown in the past. So there's this upward trend, resistance slash support. So resistance, support, 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 resistance right here, and then resistance, then support again here. So if we just extend it a little bit further out just to see, basically we could bounce off support at the 452, 453 for the moving average, but then ultimately head down to $451. Now, that $451 actually might have a breakthrough. So it might actually break through it because there's support at the $450, $449, which matches with some of the view apps I saw plus the moving averages. So if the 451 doesn't hold, the 449, 450 will. And in my opinion, I don't think we're going to break that until Friday morning if the numbers are worse than expected. Otherwise, we would bouncing off this. I'm pretty confident, in my opinion, this is just my opinion, that this upward trend or a horizontal resistance line that you could just see multiple times, it's just constantly resistance. I think it'll act as support personally. So if that is the case, then you're looking at support about the $446, $447 price point. Otherwise, it's going to be major drops, major drops. But we'll see. I don't think that's going to happen until Friday. If the numbers are worse than expected, that's what it is. So inflation is increasing. But that's basically it for today's video. Hope you guys enjoyed. Hope you guys liked it. If you do, consider dropping a like. Helps the channel. So thank you so much for that. And thanks again for following on X and YouTube. If you do want to be notified, I do post these daily. So follow me on X and YouTube to be notified when I upload my next video. Thanks again for watching. I'll see you guys in the next video. Peace.